The 2012 tax year is upon us, and the tax year is full of tax traps for the unwary. The Australian Tax Office has set up crack audit teams that may be targeting you. This presentation will show you what to look out for to ensure that you are not audited. Tax is complex and getting more complex all the time. Would you believe that the Australian Income Tax Act, when it first came out in 1936, had only 126 pages? That same Tax Act has blown out in 2012 to more than 7,000 pages. In addition, across Australia there are over 125 separate taxes, and each year there are hundreds of pages of amendments to those tax acts. Tax is complex and becoming more complex all the time. Severe penalties apply for making mistakes in your tax. Even if the mistake is an innocent mistake, penalties can double the amount of tax that you need to pay. Under the tax rules, you are guilty until you are proven innocent, in a reversal of the standard rules. Also, interest applies even if you dispute the amount that you owe the tax office. Remember, the tax office has more powers of investigation than the police. The tax office is aiming to audit more and more taxpayers each year. What is your tax profile? Well, the tax office has powerful new systems to target taxpayers for audit. If you're outside their profiles, expect to be audited. Note, these are computerized automated processes that identify and shoot out initial queries without the intervention of any human or a tax officer. Standard profiles have been prepared for almost every conceivable job in business. These profiles identify what you should be earning and what you can claim. If you are claiming more expenses than the standard profile, you will be targeted. Some of the most powerful computer systems in the country reside in the Australian Tax Office. Doing what? Data matching. That is, they take receipts that are reported as being paid to you, matching it up with what you state in your tax return. Payments to you are cross-matched to ensure that you report all income. Banks, credit unions, and most interest-paying bodies supply to the tax office details of what interest they have paid to you. All dividends are reported. All foreign source receipts and income and earnings are reported. In fact, almost all payments to you are reported. The tax office matches these reports with what you state in your tax return. If you have not reported income, you will be targeted for audit. Some of the sophisticated computerized automatic systems that the tax office has introduced automatically cross-check all reported dividends and interest with your tax return. An important thing to note is that share reinvestment schemes are still dividends that need to be included in your tax return. A favourite area that the tax office targets are work expenses. Don't guess and don't use a dodgy tax agent. Job profiles detail what the usual income for your occupation should be. Acceptable expenses for every job have been profiled by the tax office. They know what you should be earning and what you should be claiming. 90% of tax cases are won by the tax office because the taxpayer has not kept proper records. If you claim outside these parameters, you do so at your peril. Keep receipts for any deductions claimed. In 2012, the tax office is targeting investment properties. This is one of their main targets. The tax office has detailed guides as to what can be claimed as an expense. One of the main areas is repairs and maintenance. If expenses for a repair job are over $300, the tax office may regard the item as a capital item that can be depreciated over a period and not deducted. Additions and improvements are capital and not deductible. Remember, the tax office is targeting investment properties. Some other areas which set off alarm bells for the tax office include the following. Holiday homes. It's important to exclude private use, and the holiday home must really be available for rental. Split loans. Investment and home loans need to be kept separate and well documented. Capital gains tax. Well, there's not a lot of capital gains around these days, but the tax office has sophisticated systems for monitoring sales and matching that with which is reported. Another important area is overseas investments. Tax offices around the world are now swapping data and matching with that with what you put in your tax return. So what should you do? Take the complexity out of your tax affairs and leave it to the professionals. We're not just saying this, we are experts in tax. Don't leave your financial affairs to chance. Our tax fees are tax deductible, and probably one of the most important things is what we offer to you. We offer peace of mind and we guarantee your full entitlements. Take the chance out of tax with our peace of mind guarantee. We guarantee to get you your maximum refund. So give us a call on 1300 870 TAX, or fill in your details alongside and we'll send you out a free report about what and how you can claim for your tax. Thank you for your time.